Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories within company filings. Today we're diving into XFLH Capital Corporation's latest report, and let's just say it's all about getting things off the ground. This filing is like the birth certificate for a new publicly traded company detailing its initial public offering or IPO. Think of it as the moment a company officially goes up for sale on the stock market, and we get to see all the juicy details of how that happened. Before we start, if you appreciate getting straight insights from corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below, so don't miss out on that. So what is this document all about? It's a Form 8K, which is essentially a report filed by companies when something significant happens. In this case, the big event is the successful completion of XFLH Capital Corporation's IPO. This is a huge step for any company, and this report tells us precisely what went down. XFLH Capital Corporation is the company in question, and they're based out of the Cayman Islands. They are aiming to do something called an initial business combination, which basically means after they go public, they will use the money raised to buy another company. Now, what did they sell to the public? They sold units, and each unit is a package deal. It includes one ordinary share, which is like a regular piece of ownership in the company, and also one right. This right gives the holder the ability to get a fraction of another ordinary share later on. So it is like buying a share of stock with a built-in coupon for more stock down the line. Their journey to becoming a public company started with this registration statement, filed a while back. It is like the detailed resume and business plan they submitted to the government to get permission to sell their shares. Getting it declared effective by the commission means they got the green light. The real action happened on the 11th of February 2026. That's when they officially priced and signed off on the underwriting agreement. This is the contract with the investment banks like Maxim Group LLC, who help sell the company's shares to the public. It outlines how many shares will be sold, at what price, and what the banks get for their trouble. So how many units did they sell? A whopping 10 million units to the public. And at what price each unit was sold for $10? That means they raked in a cool $100 million in gross proceeds. That is a lot of money to start with. But wait, there's more. The investment banks also got an option to buy an additional 1.5 million units. This is called an over-allotment option, and it's typically used if the demand for the shares is really high, allowing the company to raise even more money. Then Therese the Rights Agreement. This is with Continental Stock Transfer and Trust Company, acting as the rights agent. This agreement details the specifics of those rights we talked about earlier, how they work, and how they'll be managed. We also see a letter agreement. This involves the company, its officers and directors, and its sponsor, XFLH Holdings Limited. The sponsor is essentially the early investor or group that helped get the company off the ground. This agreement likely covers certain understandings and commitments between them. This is a really important one. The Investment Management Trust Agreement sets up a trust account where the money raised from the IPO is placed. This is common for companies like this that are going public with the intention of acquiring another business. The money in this trust account is generally held until the company finds and completes its initial business combination. It is like a locked vault for investor money. The registration rights agreement is with certain security holders. This typically means that if these security holders have shares that aren't freely tradable, the company agrees to help them register those shares so they can eventually be sold on the public market. And here we have the Private Placement Unit Purchase Agreement. This is specifically with the sponsor XFLH Holdings Limited. This is where they bought units directly from the company, likely on similar terms to the public offering, but in a private transaction. The indemnity agreement is a standard protection for the company's officers and directors. It basically states that the company will defend and cover them for certain legal expenses if they are sued in their capacity as company leaders. Finally, an administrative support agreement between the company and the sponsor. This likely covers any ongoing support services the sponsor will provide to the company, especially in the early stages. Now let's look at the unregistered sales of equity securities section. This details a private sale that happened at the same time as the IPO. The company sold about 154,970 placement units to its sponsor, XFLH Holdings Limited, for $10 each. This means the sponsor put in an additional $1.5 million. Interestingly, before this private sale, the sponsor had already loaned the company about $278,496. In this private placement, the company basically used $278,496 of the sponsor's purchase price to pay back that loan. So it was a combination of new money and debt repayment. This private placement was conducted without registering the shares with the Securities Act, using an exemption for transactions not involving a public offering. This section covers changes to the company's foundational documents. On the 11th of February 2026, they adopted their amended and restated Memorandum and Articles of Association. Think of this as updating the company's constitution and bylaws to reflect its new status as a public entity and to align with the terms of the IPO. In the Other Events section, we find out where all that IPO money is going. As of the 13th of February 2026, a total of $100 million from both the IPO and the sponsor units was put into a US-based trust account. This trust account is managed by Continental Stock Transfer and Trust Company. The money in this trust account is untouchable until the company completes its initial business combination. There are a few conditions under which the money might be returned to shareholders, such as if the company doesn't find a business to acquire within 15 months of the IPO close. This structure is designed to protect investors who are betting on the company's ability to find a good acquisition. The company also announced the pricing of its IPO with a press release on the 11th of February, and then another press release on the 13th of February 2026 to announce the closing of the IPO. These are the official announcements to the public about these major milestones. And now the grand finale, the exhibit index. This is like the appendix of the report listing all the supporting documents. You can see all the agreements we've discussed, like the underwriting agreement, the rights agreement, and the various agreements with the sponsor. These are the actual legal documents that govern the IPO and the company's operations as a public entity. Now, looking at these results more broadly, XFLH Capital Corporation has successfully navigated the complex process of going public. They've raised a significant amount of capital, $100 million, which positions them well to pursue their stated goal of an initial business combination. The structure of holding these funds in a trust account is a common and sensible approach for a special purpose acquisition company, or SPAC, which is the likely structure here. The key risk for XFLH, and indeed for any company at this stage, is the successful identification and execution of a business combination. If they fail to find a suitable target within the stipulated time frame, investors will likely see their money returned, and the company's journey might end there. However, the inclusion of the sponsor's private placement and the initial loan conversion shows a strong commitment from their early backers, which is a positive sign. For now, XFLH has achieved its primary objective, becoming a publicly traded entity and securing the funding for its future growth. The real test will be what they do with that money in the coming months and years. Alright, that is our breakdown of XFL Capital Corporation's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.